Let's dig deeper into the move lower we're seeing in consumer staples. Look at the sector. It's down more than 7% in the last month as these treasury yields continue to rise. And yesterday, names like Mondelez, PepsiCo, Coca-Cola all saw some of their worst sessions in the past 2 years. They're down sharply again today. Here to break it all down is RBC Capital Markets analyst Nick Modi. Good to see you, Nick. What's driving such a big sell-off here?
Yeah, I think there are a couple things, Sarah. You mentioned the yields. We're now sitting at at least you could look back 10 years, the widest spread to treasuries that we've seen. In fact, treasuries, you can make more in a treasury than you can a dividend yield in any of these consumer staple stocks in aggregate. So that's number one. The second thing is fundamentals are deteriorating, right? I mean, the reality is volume is not coming back the way these companies expected. There are obviously macro pressures that are weighing on that, a lot of pricing that was taken, so that inflation is affecting the volume story. And so there's some concern that promotional levels will have to rise and that'll affect earnings, right? And then kind of on top of that, you have all this Ozempic craze and putting a lot of pressure on the food and beverage companies. And so that's your cocktail, and that's really why these stocks are trading where they're trading.
Is it legit, or would you be picking up some of these names? Like, is it justified?
I think there are opportunities, right? Look, I think the packaged food space is going to continue to be under pressure. It's hard for even a defensive stock to go up if there is earnings risk. And I do believe there is earnings risk. We have been very clear about that for this whole year. And we're starting to see some of the companies actually speak more cautiously about the future. I do think there's some great opportunities, right? I think Constellation Brands had a great quarter yesterday, 7.9% depletion growth, which you can never find that in this market right now with all the inflation that's been taken. So I like that story. That remains our number one pick. Kenvue is another high quality name that's trading at a very low valuation. And I think coming out of the gate as a public company, I think they have something to prove. And I think they'll be able to execute and they'll be able to deliver on plans. So those are two of my top ideas right now.
One of the things we've been asking executives from mostly the packaged goods companies is whether the mix of volume and price can reverse relative to what we saw earlier in 23. Is that a 24 story?
It could be, Carl. I mean, look, the reality is these companies took massive amounts of pricing, right? I mean, we had 30, 40% price increases in some situations. That creates a whole different consideration set from the consumer. So, for instance, some of the work that we've done would suggest that one of the biggest issues for the cereal category is the fact that the price of eggs have come down so much. So families are feeding their households with eggs instead of cereal, right? And so consumers are migrating to where the value is. We're seeing a lot of migration from the center of the store where pricing has been more sticky to the perimeter where we've seen deflation and disinflation at a much greater rate. So it really is going to depend on where those price gaps lie and how much pressure consumers feel. I mean, we, based on all the work we've done, believe the consumer is going to get worse before it gets better as we go through 2024.
That's interesting. And you take what Conagra said yesterday about chili and canned tomatoes. I mean, it does kind of raise the discussion, Nick, about whether habits change, when they do change, more at home or away from home.
Yeah, I mean, look, we saw a really weird period the last 3 years, right? We saw consumers going from out of home into home entirely because of the pandemic. Then some of those behaviors stuck as the kind of work-life balance changed, hybrid work changed. Now more people are going back to the office, so you've seen more of the out-of-home consumption. But now consumers are feeling more pressure, and they're bringing that consumption back in home. And so if you're a packaged food company or even a beverage company, and you can provide an out-of-home experience in-home, for instance, what Conagra's done with canned Wendy's chili as an example, those are some of the initiatives that I think will have some fruit and some bearing as we kind of roll through some of this weakness.